sellers, I hope this is a refreshing video for you to know that there's a company out there that truly wants to know what your desires are and needs are in selling your property and look to provide a solution for those exact things. I'm going to explain how we do seller financing in a story. Let's say we've got John and Marcy. Now, John was an engineer. He's worked his whole life and he has been able to pick up some small apartment buildings on the way. He's owned them for just under 20 years, so now it's time to retire. He's been managing himself after firing a couple of different management companies, and now he's just ready to relax a little bit more, and I promise you it's well deserved. But John doesn't want to go through the process of all the knick-knack deferred maintenance, and he's got 3 properties, so that would be 3 different transactions, potentially 3 different buyers, 3 different appraisals, 3 different tax bills, 3 different situations of deals dying and financing, and all of the things that John, as a savvy business person, knew he was not interested in. Fortunately for John, he met us and found out about the type of solutions that we were able to offer him. What we were able to do for John and Marcy was we were able to buy all 3 properties from them in one transaction. Then there was just one note. We put a significant down payment to cover all the money that John and Marcy needed. The remainder of it was them putting their money to work for them against an asset that they know and love. Here's what that means. We take the balance as a promissory note. Let me show you in a drawing. Here's John and Marcy, and here's their building. This is a promissory note, and it's accompanied by a deed of trust. This is what protects John and Marcy's money. We'll just use an example of $1 million. If the building was bought for $1 million and there was a down payment of, say, $200,000, which is what John and Marcy would need in this scenario, the $800,000 balance is carried on this promissory note at a fixed interest rate, secured by this piece of real estate. So John and Marcy now have a $200,000 down payment on their $1 million portfolio. $800,000 of it they're holding on a promissory note and deed of trust with a fixed monthly payment. And it's secured by the real estate that they know and love. So if anything ever went wrong, they of course would be able to get their real estate back. The new owner and management company, which is us of course, manages and controls and owns the property. All the tenant issues, all the landlord legal issues, all vacancy, rent collection problems, that's all done in the management. Now, we as the investors are not doing that. We have a professional management company in-house handling all of that, full with bookkeepers and accountants and regular reporting. In fact, we're the only firm I know that buys property like this that you can walk in our retail location, walk right in the front door and sit down and talk with us. In fact, that's what we'd like you to do if you'd like more information on how John and Marcy were able to put in this lifetime cash flow asset for them, which they can now pass to their estate as well. We handled everything for them. We worked directly with John's attorney, and now they just collect a check every month, and it's protected by a real asset. So one of the nice benefits of seller financing, besides keeping that monthly income stream, is deferring the capital gains tax. You see, if John and Marcy just sold the properties outright for cash, not only having to go through the rigmarole or potentially get a lesser cash offer, but they would pay taxes on their capital gain. Through this structure, they're able to defer their tax obligation from the capital gain and instead use those funds to actually make money. They actually make interest on those deferred funds. For easy numbers, let's say they got $1 million, okay? Well, if they bought the package for $500,000, they may be looking at a $500,000 capital gains. Well, if they sold it on contract and only took $200,000, they'll only pay capital gains tax on that $200,000. The $300,000 tax obligation that is due would be deferred into or deferred into this note, right? And be making interest. Now, you need to talk with your own tax professional. This is not personal tax advice. This is just a story of something that we can do. You always need to seek your legal and tax professional when doing these types of things. We have our attorney and our account available to speak with your legal professionals. We'd like to sit down with you and see if we can come up with a couple of potential offers for you and see if they work for you. Because let's face it, if we don't put an offer together that meets your needs, then we don't have a deal. And we only put together win-win transactions. So if you'd like more information or just to hear about this, there's absolutely no obligation. Just fill out the form below and we'll contact you, or you can reach me directly at 414-5123. That's area code 509-414-5123.